In my last espresso, I argued that central banks would spring into action. In respect to the Fed, it was true, and we have seen in May the first 50 basis point rate hike for many years. Looking forward, the Fed is likely to go ahead with substantial rate increases, and we will have some more 50 basis point hikes, and by the end of the year we expect the Fed target rate in a range between 2.5 and 2.75 percentage points. In terms of the ECB, we have not seen action yet, but recent comments from President Lagarde and other members of the Governing Council suggest that there will be the lift-off in July. And afterwards, we expect more rate hikes to come. So by September, the deposit rate is likely to be 0, and by the end of the year in positive territory. In autumn 2023, we think that the deposit rate will be at 1% and the main refinancing rate at 1.25%. So there's a range of interest rate hikes to come. And this is made to bring inflation down over time. And although we have seen the peak in inflation in the US with a rate of 8.5%, and in the euro area we are likely to see the top during the summer, it will take time before inflation rates will come down to the range central banks want to have. But in the meantime, we will have the consequences of the rate hikes, what comes through to a tightening in financing conditions. In that respect, price stability will come at a cost. And we have revised down our growth forecasts, both the US and the euro area, for 2023. In both regions, we only expect growth at 1.1% in 2023. Also for this year, we have revised down our growth forecast again. And the main reason for that is China. Here, the zero COVID policy led to an extension of the lockdowns and will have massive disruptions of the economy, and also have negative consequences on the world economy. For China itself, we now only expect 3.5% growth for this year. And of course, there's the war, and that creates further uncertainty for the economic environment. For Europe in particular, we have the threat of a sudden stop of the gas deliveries, which would have severe consequences for the economic development. But on top of this, we think that the uncertainty coming out from the overall war developments will keep it very uncertain regarding the economic outlook, but also for financial markets, which are likely to be in a volatile environment for the coming month.